How debt relief programs works this year. Managing debt in today's economic climate can feel like an uphill battle. With inflation still impacting household budgets and interest rates on loans and credit cards remaining high, many Americans are turning to debt relief programs as a lifeline. These programs provide structured ways to reduce, renegotiate, or eliminate debt. Whether you're grappling with student loans, credit card bills, or medical debt, understanding these solutions can help you regain control of your finances. Let's break down how debt relief works, include current examples, and explore practical steps you can take today to start addressing your debt. What is debt relief? Debt relief simplifies and reduces financial obligations, making repayment manageable. This might include debt consolidation, settlement, or forgiveness. For example, under President Biden's Saving on a Valuable Education (SAVE) plan, millions of borrowers saw their accrued student loan interest waived, a measure saving the average borrower $3,500 in 2024 alone. Programs like these highlight the importance of tailored solutions to modern debt challenges. Think of debt relief as pressing the reset button for your finances. For instance, if someone owes $25,000 in credit card debt but struggles with $800 monthly minimum payments, a relief program could restructure those payments to something like $300 monthly at a lower interest rate. Who is eligible for debt relief? Debt relief programs generally target unsecured debts, like credit cards, personal loans, and medical bills, but also extend to student loans under specific conditions. If you're spending over 50% of your income on debt payments or struggling to make ends meet, you may qualify. Here's a recent example. A single mother in Texas earning $45,000 annually enrolled in a debt settlement program to tackle her $35,000 credit card debt. Through negotiation, her debt was reduced to $20,000, lowering her payments by 40%. How do debt relief programs work? Let's break this process into 3 actionable steps. 1. Assessment and enrollment. The first step involves a financial review to determine your debts, income, and expenses. Reputable organizations, like those accredited by the National Foundation for Credit Counseling, NFCC, create personalized plans based on your unique financial needs. For example, companies such as Freedom Debt Relief and National Debt Relief specialize in consolidating debts into one manageable monthly payment, making it easier for clients to stay on track. 2. Negotiation with creditors. Debt relief agencies often negotiate directly with creditors. For instance, if you owe $10,000 on a credit card, the agency may work with your creditor to settle for $6,000. This approach is common in debt settlement programs. Imagine someone carrying $50,000 in unsecured debt. A settlement agency negotiates a 50% reduction on their total balance, allowing them to pay off $25,000 in lump sum installments over 3 years. 3. Execution of the plan. Once negotiations are complete, you make payments according to the agreed terms. With programs like debt consolidation, this might involve a single payment to the agency, which then distributes funds to your creditors. Why would creditors agree to debt relief? Creditors prefer receiving partial payment over the risk of no payment at all. Think of it this way. If a landlord knows they won't find another tenant soon, they might accept a lower rent to avoid leaving the apartment empty. In 2024, with rising delinquencies and credit card payments across the U.S., creditors have been more willing to negotiate rather than risk bad debts piling up. What are the main types of debt relief? A. Debt settlement. Involves negotiating with creditors to accept a lower payoff amount. Companies like Pacific Debt Relief and Accredited Debt Relief help clients reduce balances significantly. B. Debt management plans, DMPs. These plans consolidate your debts into one payment, often with reduced interest rates. For example, a recent NFCC report showed that 80% of individuals who enrolled in DMPs reduced their interest rates by at least 30%. C. Debt consolidation loans. A new loan replaces multiple debts, ideally with a lower interest rate. Credit unions often offer competitive rates for such loans. D. Government debt relief programs. Federal initiatives, such as student loan forgiveness programs, help specific groups. In 2024, the Biden-Harris administration SAVE plan forgave debt for borrowers in repayment for over 20 years, benefiting over 750,000 individuals. Current examples of debt relief. 1. Student loan relief under SAVE. In 2024, borrowers, like recent graduates from low-income families, saw significant benefits under the SAVE plan. By eliminating capitalized interest and providing $10,000 to $20,000 in relief, this program addressed decades of student loan stress. 2. Medical debt cancellation by nonprofits. Organizations like RIP Medical Debt erased over $9 billion in medical debt nationwide by partnering with donors and purchasing unpaid hospital bills for pennies on the dollar. 3. Credit card debt in high-interest climates. With credit card APRs exceeding 24% in this year, many Americans turn to programs like National Debt Relief. A family in Chicago with $40,000 in card debt negotiated down to $25,000 and now pays $300 monthly over 5 years. When should you consider debt relief? Debt relief might be a good fit if you 1. Struggle to meet minimum payments. 2. Have debt exceeding 50% of your income. 3. Are considering bankruptcy, but want alternative solutions. How can you get started? 1. Research your options. Start with accredited agencies like the NFCC or check federal websites like studentaid.gov for student loans. 2. Make direct calls. Contact creditors to request lower interest rates or payment terms. Some creditors offer hardship programs. 3. Take practical steps today. Write down all your debts, focusing on the highest interest rates first. Prioritize reducing those balances. Final thoughts. Debt relief programs offer hope, but the first step is understanding your options and acting proactively. Whether it's negotiating a lower payment or enrolling in a structured plan, small actions today can lead to significant changes tomorrow. Remember, the road to financial freedom begins with a single step. Take that step today.